Hey, good morning, everyone. Brian Hoops here with Midwest Market Solutions Market Insider TV. This is our opening commentary, and it is Friday morning, November the 7th. Good morning. Our last trading day of the week is upon us, and let's look at our overnight trends. Natural gas down just a little bit after posting some new highs. Market has bounced its head up against resistance, poked above it into some new highs, and pulled back here this morning. Crude oil, opposite effect. Dropped to new lows yesterday and is poking its head up above the support this morning. Stock market a little bit softer while gold is higher, silver is higher, corn down a quarter, beans 6.5 cents better, meal slightly higher, and the wheat 2.5 to 3.5 cents weaker. Kind of a lackadaisical overnight trade and fairly low volume. It seems like the news this morning is very, very limited. We've had more news in the last couple days, but this morning it seems like it's hard to find something to really talk about here in the trade. So let's get into it, talk about what's happening here in these markets as forecasts for Brazil. They look very good with rain over the next 6-10 days. Argentina forecast is a little bit drier than previous models. This was kind of true yesterday. They dry out and don't really have any heat that would be yield robbing. It should be beneficial as far as dryness goes to get their crops planted, but I think that's the reason why we're seeing a little bounce in the soybeans overnight. Goldman Roll starts today for December grain and cattle futures. So what this means is the long index funds who are long, let's say December corn, will need to roll out of that into another month before the end of this month when the delivery starts. So they do it about the second, third week of the month prior to delivery. So that in that case, it's right about now. That usually means if they are long December corn, December cattle, they will sell that contract month and buy the next month out. So you buy February cattle, you buy March corn, and it produces a little pressure against that December contract and a little bit of support to the next month. So especially in the cattle, you can see the spread really start to widen out between Dec and February. StoneX estimates funds sold over 18,000 corn yesterday, 22,000 beans, 13,000 meal, some big selling there, as well as 12,000 wheat on Thursday. A lot of the talk was circulating that did move some of the funds out of their positions. For one, we're extremely overbought on a technical basis on a lot of these markets, really bouncing our head against some major overhead resistance for one, due for some sort of a correction for another, and even with wheat pulling back, we still have closed higher 11 out of the last 13 sessions in the wheat. Talk was circulating that if the Supreme Court strikes down President Trump's tariffs, that many countries will just cancel their newly signed trade agreements, as Trump will lose his leverage with these foreign countries. It would all take is one country to cancel the agreement, notably China, and the rest will follow. President Trump will lose all of his leverage against these countries in retaliation, and this would be kind of a disaster as far as all the trade agreements that have been reached, all the premium that's been put into, especially soybeans here recently with the China agreement. All that is gone out the window, and it would really be a major game changer for our grain markets. WASDE report will be released a week from today at 11 o'clock Central Time. We've had some private firms give their estimates this week. We'll see more and more private firms give their analysis. Ours will be released by Tuesday of next week for the news wires, and they will compile it as of Tuesday, so we should have some information on that day. Cash cattle trade still developing, but Northern Dress trade 360. And that's $2 higher than last week's weighted averages. Some 358 was noted yesterday, and as low as 355. We also saw live trade steady to $2 lower, 228 to 230, and in the South, 232, $4 lower than last week's weighted average. The December futures closed yesterday at 218.77, so we're holding a huge discount to the cash markets, and that big discount is usually a very friendly for the cash markets, usually friendly for the futures. We're too heavily discount and need to pair up that discount. So fundamentally, we're oversold, should rally. Let's see if in fact we do. as we go into today's trade. I think last time we saw big losses in the feeder cattle. It was live cattle that tried to lead us higher. They tried yesterday, and we'll see if they're more successful today. Have a good day, everyone. Good luck, good trading, and as always, this has been Brian Hoops from Midwest Markets. We'll talk to you soon.